The huge question, obviously, is fundamentally, can the business be viable? And do you think that's clear yet? Like, do we know that stripped down, that ride sharing, ride hailing, forget everything else, can be a moneymaker?
I think it can be a moneymaker for sure. I think over the next year, we'll see both Uber and Lyft demonstrate that in the densely populated cities, they have a profitable business model. I think the big open question is, how big can this business be? How much can they expand out of the cities into the suburbs, sort of get into that budget that is just not just urban transportation, but is the trillions of dollars that people are spending on buying and maintaining their cars. That's the real promise, right? That's the $1 trillion idea.
But also, Arun, the $1 trillion idea is you don't need drivers at all. This all becomes autonomous in some way. And how much does that utopia get built into the expectations for these businesses?
Well, I guess it depends on who you ask. Uber used to be really aggressive about their projections of when the autonomous vehicles would be available. I mean, according to Travis Kalanick a few years ago, we already should have seen them arrive. So we know that they are a few years off. But what we want to see is Uber and Lyft charting a path to sort of dramatically expanding their market once the autonomous driving technology is ready. And for that, they need to get more suburban customers, get current car owners to give us some indication that they're willing, at the right price, to give up their car and spend the thousands of dollars they spend on their car on Uber and Lyft.
But Arun, even if you get that sort of expansion, I mean, there's still a price issue here. And you have customers that are so conditioned now to want the lower price or want the lowest price that's out there. This isn't only just with Uber and Lyft, but throughout the sharing economy. I mean, this is what people do. How do you break free from that as a business when the very business model was almost built on being the lowest cost option?
Well, I think one of the things you do is go public, and then you've got shareholder pressure, and then you get out of a price war that you're having with a smaller competitor and start to grow your margins. And I think we're seeing the beginnings of that certainly with Lyft. As Mandeep pointed out, I mean, that net revenue per user number is very disappointing from Uber. We have expected to see it higher, but I think if you break out the Uber Eats and you focus on just the ride-hail business, you will start to see that growing. What we do have to wrap our heads around is that they offered a lower cost option, but it was a much higher quality product to start out. Compared to taxi, Uber was much higher quality, Lyft was much higher quality. And over time, consumers will get used to the idea that this is a much better product. And so it's rationally costing 20, 25% more than taxi. So I think they can hold pricing power in the long run. The question is, can they get the suburban customers? That's really the big growth question.